Good afternoon, everyone. Welcome to another episode of Entrepreneur Speak series. Good afternoon, Piyush. So,
Hi, Harshil.
so today we have with us Piyush Surana, and he graduated from IIM Ahmedabad in the year 2008. And after that, he has held several positions in various industries, starting from working with Anand Rathi Financial Services, then holding a strategic role with Fortis Healthcare, and then, holding several leadership positions with three big unicorns, namely Uber, Ola, and Zomato. And now finally, he's working as an investment principal with Tomorrow Capital. And I guess you just completed 2 years working, right?
Yeah, just completed 2 years,
Okay,
Harshil.
congratulations on that.
Thanks.
So why don't we start off with you introducing your role with us?
Sure, yeah, Harshil. So what I call myself is an accidental investor, right? So I think this was not a career path that had really defined for myself that I wanted to be an investor one day. I've just been lucky enough to be at the right place at the right time, I guess, and I think and sort of build the kind of skill sets that are useful. And this is something that I think we'll touch upon multiple times during our conversation. So, like you mentioned, right, I had the opportunity of working in both more old school economy companies, which is, telecom and healthcare, as well as, sort of very early stage startups, which eventually turned out to be really huge. So I was one of the first employees for Uber in India, amongst the first 50. And, sort of at one point in time, I was handling all the tier three markets for Ola, which is 63 out of the 90 markets that they exist in. And eventually I was global head of customer experience for Zomato. So, sort of the kind of skills that are useful. And it just so happened that, Tomorrow Capital Tomorrow Capital is the $100 million fund, consumer fund based out of Bombay. We invest in early stage startups, typically pre-series A, series A. Our sweet spot is somewhere between $1 to $3 million. Typically we are usually the first institutional check into a startup, but may not always be the case. There might be some smaller seed funds sometimes, right? So that's how we typically operate. And people know what consumer funds are. Typically, the one thing that really is very different for us is that we are very operationally hands-on with our investments. So, and we'll cover that when we talk about few of our investment companies. But we go in, we help the founders really set up very strong foundations for the business, and then sort of build it before we sort of invest in any other company. And that sort of reflects in the kind of team we have as well. So none of our team actually comes from very investor kind of a background, very financial savvy background. All of us come with some sort of operational expertise, right? So, for example, I have experience of working at early stage startups in growth and customer experience. Similarly, we have people who are marketing experts, people who have worked in sales, people who have worked in tech. So, we are able to build a team that is able to help almost all aspects of a startup that we invest in. And that is the philosophy. Which is why I said, I was lucky enough to have that kind of skill set that Tomorrow Capital was looking for,
Yeah.
and which is why I guess I'm here today.
So I think so that is what differentiates your venture capital firm with the others, right? You also offer operational expertise, while many of the famous VCs are just looking for the investment.
Yeah, yeah. Actually, it's very interesting. So one principal in our fund only takes one investment at one point in time. So we work almost 4 to 5 days out of our investee companies' offices, helping them expand till they are ready for the next growth level, which is either the next round of funding or a next expansion strategy. So we expertise in that, accelerating that early stage growth for a company. A great example is our first company, which is Genrico, right? So I think great batch of founders from IT Bombay. They had a great idea. They had started one store. So Genrico is a chain of retail pharmacy, physical format. So they had started one store. They had sort of a very good hold on the tech, the supply chain, the operations. But they've never sold anything in their life before, right? So I think we entered at a very early stage, and I think worked with them. We actually one of our team members went and headed marketing for them for a while, created the marketing playbook. One of our principals headed sales for them, hired the team, set up the playbook before we moved out. So worked with them very intensively for 9 to 12 months. And so that within 12 months, we were able to raise the next round, which was almost at a 10x post money valuation to the previous round, right? So companies don't grow that fast also.
Yeah.
So it's a great example for us to prove, right, that not only money, but if we can add a little more value in the early stages, help form a really good foundation, you can really sort of accelerate the growth and also create a very strong foundation for the startup.
Yeah, and since your fund is morely focused on the consumer side, is it because the team has a lot of experience in that area?
No, it's the other way around because we have
Okay.
focused on consumer side, so we built a team the other way. Why
Okay.
we are focused on consumer side is more or less the thesis of the fund, right? Which is we really believe that India is an economy where consumption is still very, very small. And there are going to be multiplicative effects on how consumption increase. So not only are income levels going to grow up, but as more generations come in, you and me, for example, uh, if I may take the liberty of calling us the same generation,
Yeah, yeah.
but our generation, for example, spends a lot more of our income than our parents did, right? They would have a lot more of their income in terms of savings. What we do is a lot more of our income goes into consumption. So I believe not only are the income levels going to rise, but sort of consumption as a percentage of income level is also going to rise. You're going to start seeing parts of demographics which were not earlier consuming as much starting to consume, right? So we are going to see a lot more women in the workforce. We do have a lot more millennials who want to consume, right? We'll have a lot of agri consumption and consumption in the tier 3 or 4, what we like to call Bharat. So I think there's going to be a large multiplicative effect on consumption, and which is where the thesis of the fund was that, if you look at large consumption sectors and leave out two or three of the really new age ones, but if you look at the brands in those consumption sectors, they're typically brands that have either existed for 50 years or are international brands who have set up shop in India, or both, right? So if you talk about any of the large consumption sectors in retail, so whether it's personal care, soaps, anything you want to talk about, usually either it's really large international brands or brands that have been around forever. And we believe as sort of the consumption pattern changes, brands will emerge that understand India better and that understand the new age consumers better. So we wanted to be in the right place to support those brands and create like the next batch of really large consumer businesses out of India.
Right, right. I think so. I also totally agree with this point because I think so. People of our generation are looking for a lot more experiences. They want to try out new things and, you know, keep on experiencing things. So, be
Yeah,
it, earlier we were not used to going to stand-up comedy or any sort of that thing, but now we
yeah,
see people are willing to pay anything between 500 or 1,000 rupees for a
yeah,
2 hour show.
yeah.
So, I think
Yeah,
so.
and a
India
lot of
is,
other things, right? I mean, see,
yeah,
what happens is earlier, someone living in, say, a village, tier 3 or tier 4 village in India, usually had no uh, clue of what are the consumption patterns in an urban area, right? But
right.
now, with the spread of internet, with the spread of e-commerce, not only does he have access to trends, so he can watch online and he can see what stars are wearing on the screen or what are the current trends, but he also has the ability to order it wherever he is in India, right? Today almost 90 to 95% of the postcodes in India are serviced by e-commerce. So I think consumption patterns will change substantially, will continue to change, and in fact the kind of situation we are in only will only accelerate that change, right?
Yeah.
So that will continue to happen.
So, how do you go about evaluating these startups which are in such an early stage? Is it more about the idea or the team than the business model since it is in the early stage?
No, it's a mix of three or four things, right? So first thing is the evaluation process on what are the things that we look at when we're evaluating a startup. And I think the first thing that you look at is, what is the problem and what is the solution that they're offering, right? I mean, does that problem really exist? Because sometimes founder can be really excited about what he thinks is a problem, but consumers don't really think it is a problem, right? Sometimes consumers may not even know that it is a problem. There's a quote often misattributed to Ford that if I'd asked people what they wanted, they would have said faster horses, but
Right.
sometimes even the consumers don't understand that there's a need that exists. So is there a problem? Is it a large enough problem to solve, right? I mean, large enough problem to create a business out of? Is it the best solution to the problem? So maybe you've understood the problem really well, but maybe a solution is not what is the best. um, sort of will people actually pay for the solution? So, people might like a product, but will they pay for it? And I think lots of businesses are questioning that again and again. A great example, recent example is Khata Book, which is only, like valued in millions of dollars and has hundreds of thousands of consumers. But we really even now don't understand whether people are willing to pay for that product because they've never even tried to switch on that tap, right? So, are people willing to pay for the product? Is the solution scalable, right? So, I mean, it might be a good product, it might be a good solution, but is it replicable so that it will become really large in the future? And is there a mode to the solution? So if you talk about it, then you're basically breaking it down into three parts, right? This problem solution thing, which is there a product market fit? Is there a is there a scalable product market fit? So will the product market fit expand over a period of time? And is there a scalable, profitable product market fit? So not only will it expand, but will also make money for you as it expands, right? Great example, I think, is the way the light bulb was invented, and we tend to think startups only happen today, but new businesses used to happen, centuries ago as well. And when Edison first invented the light bulb, it's very important to understand that there was really no way to test it, right? Because no homes really had light switchings at that point in time. So how could he test it? So in order to check that light bulb, he had to spend a lot of money to create an entire electricity grid in an area of Manhattan where he tested this, right? So for one light bulb, which would probably sell at say 100 at $1, he spends hundreds of thousands of dollars to create that because he sees that if this works, this is both a profitable as well as a scalable product. So I think the first thing we look at is the problem and the solution. The second thing we look at is the team, like you rightly mentioned. So does this, what is the background, the skill set, the experience that this team brings to the table? Are they the best team to solve this problem? What is the unique insight that they have into this particular problem that makes them the right team for this? Right? So that is the second thing. And I think that the third thing is more particular to the fund itself, right? So every fund has a mandate on the basis of which it invests. So for example, we would only do B2C, we would only invest at a particular size of the company. So we would not do absolute seed, but we also would not do companies that are already looking for say 30, 40, $50 million raise, right? So the size, there's some that we don't, for example, there's some categories that we don't invest in. So we don't invest in alcohol or meat or tobacco. So every sort of fund has their own mandate. You also look at your portfolio company. So for example, sometimes it might be a good business, but if you invested in a business that's very similar, you will not be able to invest in another business in the same space. So yeah, a bunch of things that you look at, but largely divided into the problem, the solution, and the product market fit, the team, and eventually your mandate to invest.
Okay. And so you earlier talked about Generico, which was your first investment. So why don't you tell us something about Bonito Designs, which I believe is your second investment?
Sure. So Bonito is basically an interior service provider for new homes. So they basically provide end-to-end turnkey solutions for people who have bought new homes. So they design your home, they'll also construct it for you and deliver it to you within a certain timeline. This is a huge market, largely fragmented. So I think one of the large consumer thesis for us is a lot of sectors where consumption will move from unbranded to branded, and from sort of unorganized to organized sector. This happens across the world, as the economy sort of progresses, and this is one of those largest areas where this is true, right? Which is currently, if you look at it, how do people make their homes? Typically, you'll have someone who'll come and make the Almira, you'll have someone who'll do the painting, and then you'll be handling the contractor, or five or six different people, and we take that headache out and we say, give us what your budget is, and that budget typically for us ranges between say 8 to 20 lakhs depending on the size and the design you want. And we will create a design for you, and we'll also deliver it for you without you having to do this whole headache of dealing with 1,000 different people, right? And look, managing the mystery and the contractor and everyone. So that is how.
So as we were talking about Bonito Designs, so my question regarding that was that since it is an interior design firm, so where do you see the demand coming from? Is it mostly from the metro cities or even from the tier two or three cities? Are you seeing some interest?
So eventually, yes, I think the demand will come from everywhere. right? But at the moment, I think for us, the metro cities themselves are a large enough market, right? Every year, this market is as large as the real estate market, right? Because as many homes get delivered every year, that many prospective customers we have. And that in itself is a large market, even in the top six cities. And eventually, once we have a good, sort of a good tech stack that enables us to do a lot of the stuff virtually, which we are already working on, it would be easier and easier for us to then expand to more and more cities. And not just India, but sort of Southeast Asia and a lot of other markets.
So, what was that one thing about the team or, about Bonito Designs that made you invest in them?
As I told you, right? I mean, you look for that one unique insight in any team that you want to invest in, right? So I think for both Generic and Bonito, they came across as very strong. In Bonito, for example, the team, while the rest of the industry was working towards how to sort of make it more and more modular, more and more easier to construct, Bonito was going the other way actually, which was how to make our designs more and more unique, how to make sure that the customers find our designs the best, right? And a great example of that is the number of followers which they have on YouTube, which is more than
Okay.
500,000 followers, right? So I think that was one of the unique insights that the team had, which was very design focused rather than just purely efficiency, because efficiency eventually become table stakes, right? Similarly, Generico, I think the team had a very clear focus that we really think that generic medicine is something that we want to work on. We can create a proprietary supply chain out of it, and eventually control the customers. So if you look at healthcare today, usually which medicine you buy is dictated by which doctor you go to, right? Your doctor will write the name of a medicine on a piece of prescription, and then you take it to the shop, and the shop will give you that medicine. So in a way, a pharmacy is just a dispensing point, right? And therefore they get the margins of a dispensing point, which is the margin you would get for maintaining inventory and for servicing a customer.
Okay, so now coming to the situation we are in right now in this pandemic. So, what do you think has been the impact of this pandemic on the startups?
Uh, so I think see business goes and comes in cycles, right? But I think we should recognize that no one's seen this kind of an impact ever. I don't think even we are not even like through this pandemic yet, right? So a lot of things, a lot of learnings, a lot of data points will continue to emerge and explain how and why, right? But eventually, what you're looking at is we are definitely seeing a severe supply and demand side shock to the consumption economy, right? I mean, in times like these, which are stressful, people go back to some old habits, like obviously they save more rather than consume more, and they will cut out all sorts of frivolous spending, right? And then there's an impact on all kinds, and then there are some tangential impacts also. In times like these, people will also go back to the brands that they are more comfortable with, that they've been using forever, rather than experiment with new products and new brands. So obviously, makes the environment a little sort of tight for startups. I think. I mean, this is a period when a lot of funds have to also focus on working with the startups to make sure that they have the cash flow to ride out this tough time. But I also believe that India is a robust market. We will bounce back. I think that consumption story in the long run is not going to go away anywhere, right? People are still going to consume. We are still going to have an economy that's going to grow in the long run at least 7 to 8% per annum, if not more. So I think that consumption will come back. Obviously, in the short term, people have to just manage the cash flows and their businesses whichever way they can.
Right. And I think so, the technology companies across the world are still doing great in this pandemic. As you see, all these stocks of Amazon, Google are still up from their historical highs.
Yeah. So not only tech companies, I think there in any event, right? There'll always be certain sectors that will take advantage, right? So when you're working from home, there are certain sectors that will definitely be more appealing, right? So edutech is a great sector where people will be working, right? More and more online banking, so neobanks, financial services that are more online based, healthcare. So till now, for the first time, government has allowed certain regulations on telemedicine. So I think there'll always be areas that will grow right now, right? But it's very important to understand business models that are robust and for the long term. So there'll be some shifts that are more long term. People will work more from home. People will be more will consume more online. People will buy more e-commerce, and then there are some that are very short-term changes, right? So I think people will still continue to go to office. It's not as if all offices will stop existing, and people will and students will still go to school once things become normal, right? So it's very important to understand shifts that are short-term and shifts that are long-term, and obviously bet on some of those long-term shifts.
So, as we know that you graduated in the year 2008, which was right in the middle of the global financial crisis. So, what was your experience then? What all challenges did you face?
That's very interesting, So yeah, I mean, as a commerce grad who did most of his courses in finance, it was about the toughest time to pass out, right? So I did my summer internship at Merrill Lynch. They ceased to exist by the time I passed out. Joined an Indian investment bank. That bank shut down 1 year after I passed out. Took me another 9 to 10 months to really get into a role that I really wanted to do and wanted to enjoy. And obviously, it was a tough time then, right? But if you look at it, one of the things that one of the biggest mistakes that we humans make is that we always overestimate the importance of the short run and underestimate the importance of the long run, right? So I think over a period of time, it's important to understand that you're not building careers or skills for just the next 2 years, right? You're building it for a long career ahead, and over the long run, I think things will tend to average out, right? I mean, if you're a good employee, you'll find a way to do well, even in bad economy, but you'll always get those opportunities once things become normal, and then obviously you see growth spurts as well, right? And then this is an example I give to a lot of people that I talk to, right? And they talk about, you passed out in 2008. How did you plan for your career? It's very, very hard to plan for your career. The last three companies that I worked in did not exist when I passed out of campus, right? So Ola, Uber, and Zomato are very new age companies. So you really cannot plan for that. What you can do is try to learn the kind of skills and the kind of sort of take initiative in the kind of areas that you believe that will lead you to become a better resource and a better person, right? And you have to be, as long as you do that, you'll be fine in the long run, right? And then I think the last takeaway that I probably have is, or the second last probably, is that don't be afraid to take initiative. Eventually, it's very clear whether you're an investor or you're a person who's trying to his or her career. No risk, no return, right? So if you want to have returns in life, there'll be times when you have to take calls and do things which might seem risky to others, but you minimize your downside and you give yourself the sort of opportunity to maximize your potential. And that's really, really, I'm not saying be stupid, but be open to opportunities, right? And then just the last thing, which is maybe a little different from what you're saying, is, and one thing that comes probably from a little more experience, right, is like things that give you satisfaction in the long run may not exactly be the things that give you money in the long run. So be very clear about what you also want out of your career, and then that cannot be just the paycheck, right? So those are some of the things that probably I would say, and probably lessons of people passing out in this tough time.
So, you first started with, working in core finance roles with, all the bulge bracket investment banks. And then sometime later in career, when did you figure out that you wanted to work for these young startups in more leadership roles? How did that shift happen?
Yeah, I think I was lucky to get both sides of it, right? So I think I worked in finance, but that was very initially. And then I had the opportunity for 4 years or 5 years to work in some really core companies, some big companies that had very standardized sets of processes, had, sort of a way to look at things, a way to do innovation slowly, gradually. And then sort of, how do you build structures in large organizations? And they were slow growth companies, so the structures were important, right? And then but the problem with being in those situations, like I said, since there's no risk, the return is also there for consummately. So if I continue to stay in those companies, I would still have continued to grow, but probably not at the pace that I've grown at, right? I mean, it's like financial markets, right? I mean, debt is lower risk, but you also get lower return. Stock market in the short term is lower risk, higher risk, but over the long run will always give you higher beta, right? So uh, given that, I think it was important for me to try and find opportunities where I thought I could scale myself faster. And I think a lot of these things also happened by chance. So Uber just came along because I was at the right place at the right time. Uber India's employee number one was a batchmate of mine from campus, right? And they were looking to expand the team. Um, and I was very interested in trying to go to some place where I could test myself more, get more responsibilities, not have to wait till my hairs get gray till I had those responsibilities, right? Uh, and Uber, and so actually, I was in Delhi at that point in time, and Uber wanted me to, and I wanted to join the Uber Delhi team because Delhi and Bangalore were the two largest markets. But they were looking to launch Calcutta at that point in time, and they wanted someone. I'm born and brought up in Calcutta, so they wanted someone who understood that market well. And again, it was a risk that I was willing to take because I thought that the downside was very low, right? If I did well, it would really set me out because I'd be managing a really large market by myself. If it didn't work out, it was very easy for me to come back and then, be in some other market. And then fortunately, it worked out really well. Uber became, actually, Calcutta became Uber's fastest growing market internationally. I became a bar raiser at Uber where, I had a veto power over all new employees coming in because we wanted to make sure as we grow fast, we do not let go of the quality of people that we are taking in, right? And then things happened. I moved to Ola, and then to Zomato, and now I'm here. But the idea is, you build the kind of skills. So I was in the right place earlier in my career to understand that structures are important. That you build policies and also, but I also worked at some fast moving places where I understand the importance of taking risk and sometimes moving fast and breaking things in order to get things done. So,
Okay. So, now looking in hindsight, what were your top three learnings during your MBA days?
That's very interesting, actually. Sort of because this is a question that comes often even from people that I mentor. So, I think three really large things that stand out from me. See, most of us who go to really premier schools, right? You realize, and you've usually been always the top of your class, the top of your college. Some standing out, right? Suddenly, you're no longer the most outstanding person in the room, right? You're no longer the smartest person in the room, and that in itself is a large learning experience because you then learn to appreciate different points of view. People who come from very different kind of backgrounds have a very different point of view, who are just as smart as you, but look at things a little more differently than you. And that is something that is going to be true for the rest of your career, right? Because you're going to go to companies where the people are really smart, and you'll have to appreciate different points of view. And that is why I think one of the biggest learning experience that I had, right? Uh, the second large learning I had is that IQ is table stakes, right? As long as you are reasonably smart and have a good IQ will not guarantee success in life. It does not also prevent you from failing in life. So, and this is science actually, but I also learned it through experience at MBA. The most successful people are not people who have the highest IQ. I think the two largest things that have the highest correlation to success in your career, whether you are in service or you're a founder, or whatever you decide to do in life. The two major factors that make a lot of difference is one is how much motivation you have, and second is how much discipline you have, because one without the other does not work, right? And then if you can combine those two, you'll kind of, and I think IMA was a very right place to sort of inculcate that, because the kind of pressure you deal with in the first year on campus, you cannot survive unless you have the motivation to get through and the discipline to be able to prioritize what is important, and then sort of it's a very funny story. I went in, so my wife is someone I've been dating from college days, and so when I went in at IMA, she would not understand why I had no longer had time to talk to her, right? Because first year is so tough. But I think the idea is, I mean, jokes apart, the idea is that you have to learn how to prioritize things, and that is what IMA teaches you really, really well. And I think the third thing that you cannot take away is that a solid foundation is really necessary for building any large edifice, right? So I think a solid foundation at your B school, both in terms of technical skills, in terms of teaching you the right motivating factors and the discipline in life, is really important for your career later. So spend time, use it wisely when you're there. You don't understand how important it is now, right now. You'll understand it later. But so, in fact, I probably think if I had gone and done my MBA after I had a little more experience, and sort of, I knew how to apply that experience in class, probably would have served me better. But, that solid foundation is really important for you to move on to, sort of have a really good career after you get out of it.
Okay, I think so. I totally resonate with the learnings you just shared. So I think so we are pushing the time limit. So we will have to end it here. But thank you so much for taking out the time and talking to us. Thank you so much.
Sure, Samir, it was great talking to you, Harshil, and I think it's a great initiative for you guys. I hope you continue to do this work.
Yes. Thank you so much.
Sure, thanks.